Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Friday, June the 20th. The year's 2025. Let's talk trading. It's time for the weekly wrap-up. These videos are for educational purposes only. Your results may differ from mine. As always, I hope you had your risk management in place every trade this week, so you didn't lose more than you were willing to lose on any one single trade or during any one single session. And here we go. We look at the weekly chart. All the gaps have filled. The pound is now 48 pips below the weekly open, 119, 120 off the high, and 120 off the low. We're right in the middle. And taking a look to the left, you can see we are in the lower wick zone of the previous week's candle. We'll take a zoom out to the month. We're 40 pips above the monthly open. We're 128 off the high and 121 off the low, pretty much in the middle. We drop down to the daily chart and we can see we crossed above crossed into the opening range for the month and across the monthly open, and we're sitting here at 135.05 at the moment, which is about right in the middle of the opening range. Now, we dropped out of the opening range for the week on Tuesday big time. We haven't got back there yet. And zooming out to the year, we're 993 pips above the yearly open, 129 off the high, and 1,404 pips off the low. And we had an inside bar 4 days ago. We are still below that inside bar range. And once again, lots of inside bar action out there across the pairs for the inside bar traders. And I don't think there's any inside bar traders. I guess people watching the videos don't use the inside bar. Only 63 pips today. It's Friday. It's almost summer. I guess summer begins. What day does summer begin? Is it tomorrow? Sunday? Somewhere around here summer begins. So it looks like the traders must be taking their vacations because the volatility is almost non-existent. I mean, the euro only 47 pips, dollar, yen only 60. Looks like we just took off in the each of the sessions here. We've got upward motion from the Asian. Looks like the same thing during the London session, and looks like New York kind of continued it to the upside. We're in that upper or red rat zone at the moment, and we are definitely in the area with the smart rat zone here. Bambino Flex indicator said to go long. Pivot trading plan said price near pivot point, go long. And I don't even think we hit the pivot today. Looks like we missed it. Yes, we missed the pivot today. So we've got a missed pivot hanging out there for June on the daily. On the week, we missed the pivot from what, 4 weeks ago. Only missed it by 4 pips. And for the monthly, we did take it out. So we still have that March miss pivot down here at 25, call it 25.14. In and out of that upper wick zone. This looks like He returned to it and then shot right back through it. So in and out, in and out. And just one thing to note, see when price goes above that upper wick zone, you get some short opportunities, but you have to be really careful there. Sometimes you get that big drop, but yeah, you can get your fingers burned. That's why you have to have a plan. Now for the range, we have 60 at the 66th percentile, 239 pips. Notice we did not break the high, but we broke the low by 73 pips. So lower high, lower low. High minus close, 121, close minus low, 118. For you rats, and for you weekly crossover traders, you were rewarded. High minus open, 70 pips to the upside, and open minus low, 169 pips to the downside. Taking a look at the simple price action chart here. Notice what we're highlighting at the inside bar, outside bar. We had two outside bars in a row on H1. We drop down to M30. There's an outside bar. And I noticed that usually when you break the high or low of an outside bar, you have a pretty big reaction, almost more so than the inside bar. But here you have some nice movement. You had three inside bars in a row. But notice here, going short once again, above that daily high, just don't get that motion. So you can get burned. I mean, here, there was a nice short off of that outside bar that was above it, but you see it returned to that wick zone and the price got rejected out of that wick zone. Second time, we're just crossing the 3,500 level. The double O trade, psychological. See, we've got a highest low trigger here on H1. We just had a trigger here, 3504. Could have picked up about 4 pips there. If you stayed in it, you'd be up 6. And it looks like price is doing that rangy thing right here. Walmart likes to trade. And it's funny, I was trading, I think, was it last week? It was like every time I'd see a one ball, if I didn't get out, price just kept reversing on me. It was just crazy. I kept kicking myself because I wanted to be patient as opposed to saying, you know what, let me just get out here with my pip or 0.5 pip or whatever it happened to be at the time, 2 pips, and instead of trying to look for more. Because even in this case, you push to a 2 ball and turn right around. And usually 2 balls are the ones that'll push down. So probably here there was probably a 1 ball, and then that turned into a 2 ball. Whoops, went back too far. Okay, here we go. Let's see, just looking at a flip-flop box there, along with the difference on the EMA. There's a couple pips to be had. See how quick you have to take these trades sometimes? Take the profit. you look left, you can see things got pushed up from this area. And the profit has been taken away. Just like that. But chances are this would have been the flip-flop. That would have been one. Then you got this. That would have been a quick one. And so you have to look here, see where that bottom is. You can see right there would have been a nice place to exit. That would have been a nice place to exit if it comes back down and you get another short trigger. But just noticing the low was 94.6. So in other words, it went double low to 95. And usually it wants to go back to the double low after it hits that 95 the first time. I've seen that play out many, many times. That's why it's 00, 95, 90, 85, 75. Because every time it hits one of these psychological levels, the price has to then go to the next psychological level, either up to 25 or down to 75. And the question is, can you read the charts to get it? Now, just a quick look here. This was a gap down. That gap hasn't filled. Expect that gap to fill. And then price might just turn right back around. So keep an eye on price. Does it get to 35.01 and then turn? So percent ATR in June's at 55. I don't think we pushed. Let's see, the range is at 250. So we've got 6 more trading days left this month. And we're kind of a low. I don't think we've pushed the accumulated range. We're still at 1533. So we pushed it this month, but I don't think we've pushed it higher since that push. And the close minus open. Oh, we're dropped down to 7.91. I remember we were at 8 before. Okay, let's take a quick look here at the month. Inside the upper wick zone, we crossed above the previous mid and pivot. Higher high, higher low for the month so far. And we know sellers are in strong control in the week. We exceeded the previous range by 63 pips. We're inside that lower wick zone. Seller strong control. Lower high, lower low. And on the daily, price above the upper wick zone. Buyer strong control. We want to fade the pivot. That's probably not going to happen. A higher high, higher low today. Notice this big drop. That's a return bar. So let's take a quick look back here. Looks like we hit 35.01 and we got a 1 ball and price returned on it. So, you know, it's not really a prediction. It's just something that statistically, this is what happens. And so these gaps fill. When you're trading, you look for these to happen. And if it doesn't fill immediately, you make a note, either a mental note or write it down, put it on a post-it note or something, say, hey, or draw a line. Price will probably come back to here. So when you got a trigger here, right here, there's a flip-flop box, okay, there might be 2 pips to be had. Let's take it as soon as the market gives it to us. And so right now there's another flip-flop box right there. 1 pip. I don't see any gaps. So double O